Is Sydney's housing market set to explode with a 10% price rise this year? Dive in as we unravel Westpac's latest prediction and what it means for home buyers and investors across Australia.
Yeah, I can't believe I'm going to say it, but Sydney house prices are predicted to increase by up to 10% this year due to a couple of different reasons, including migration, tighter rental market, and just limited supply, according to Westpac's most recent forecast.
Westpac recently updated their forecast. Now they expect national dwelling values to rise by 7% this year and an additional 4% next year. Previously, they forecast no change this year and 5% increase next year.
Westpac's initial forecast for Sydney was a mere 1% this year. Following this year's 10% increase, they're predicting Sydney prices to rise by 6% in 2024 and 4% in 2025.
Other states such as Perth is predicted to witness the second highest growth at 8%, Brisbane at 6%, and Melbourne at 4%. Matthew Hassain, Westpac's senior economist, stated Australia's housing market has surpassed expectations, especially regarding prices.
We have seen a pretty big rebound in prices across Australia, with the 5 major cities seeing increases by 4% this year, rebounding from 5.2% from February's low. Despite 4 rate rises by the Reserve Bank between February and June, these gains were considered pretty well sustained.
Now, Jaden, this is quite bizarre, seeing property prices and the increase predicted, especially given that we've seen such a high increase in rates. Why is this the case? What are we seeing anecdotally out there?
Yeah, so from what we've seen from our customers, we have seen a lot of suppressed demand. So we saw people who were thinking about buying during the COVID period, the last 2 or 3 years, held off, thought, no, I'm going to wait for the market to drop. That didn't happen. It has come back potentially a little bit from the peak, but it's still relatively unchanged. So we've seen a lot of people that have been waiting and decided, well, I'm going to stop waiting. I'm not going to try and time the market. I'm just going to get in sooner rather than later. The second sort of cohort of people we are seeing a lot of is where there's been massive rental increases. In the 12 months to February, rent increased by over 10% nationally across Australia. So that has been a big jump. Obviously, rates have risen, but rent has gone up as well. And people are starting to do the numbers and say, well, I could buy my own house, I could start paying off that loan, build equity, and it could start to make sense, especially if you're starting to look to settle down, you got children in school, etc. You might not want to move around every 6 months when your lease ends. The third reason is potentially landlords selling their property is the other reason. It's been a bit of a prompt where people said, well, my landlord's going to sell up, I need to move out, I need to look at other situations, and they've got a deposit that makes sense. So there can be a variety of factors. Like I said, it's a bit anecdotally from what we're seeing. I sat down with Jack yesterday. He's been looking at doing renovations on his place on the Gold Coast, looking at doing an extension to the home. And we had a builder locked in, had spent the last 3 months workshopping, getting everything ready, was about to sign the contract with the builder, and they pulled out at the last minute. So we're seeing this pretty often where people are trying to build, they might be trying to get a block of land, but the building prices are either increasing, it's either getting too expensive, it's not economical to actually build a home, and this is causing an issue with the supply, because if you're not able to build more homes, create more supply, then there's only a finite amount of homes available, which more people are competing over, and it's pushing up the prices. So we are seeing that lack of supply causing some really big issues, and which is really what's going to cause this price growth over the next year or two.
And I think it is a perfect storm. We've got increased migration, cost of construction going haywire. Even the number of construction approvals are down. We're starting to see a lack of supply. So there's all these things happening where traditionally when rates rise, you start to see property values decreasing. So it's really interesting to see. Guys, if you do find value in this video, please consider hitting that subscribe button, as it does really help out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content. We hope you enjoy. Now, continuing on, the primary driver behind these gains is a sudden increase in migration flows, tighter rental markets, and lack of supply in the market, like Jaden sort of mentioned before.
So according to Westpac and even the numbers, the price growth was most pronounced in markets where there's been significant migration. So we're talking Sydney and Melbourne. And then, as we've covered in other videos recently, people have been moving out of Sydney and Melbourne to other states where it's a bit cheaper, like Brisbane, Adelaide, Perth. But the big question here is, how sustainable are these growth? How are people going to afford it? You mentioned before, people's borrowing capacity is going down as the rates have risen. So there are concerns about the sustainability of the price rebound because it's based on a low supply volume. Changes in the supply-demand ratio could affect these gains. If a bunch of new properties hit the market, if heaps of supply comes on, then it's going to help. But as you know, with building, it takes 2 to 5 years. You need to go through council approval, you need to get the building, you need to get the land, there's all sorts of issues, so it's not an easy problem to solve.
Even Westpac's senior economist has labelled the housing surge as abnormal, noting that previous recovery cycles typically occur when the Reserve Bank starts to actively reduce the rates. Population-driven factors usually impact property prices slowly. Often, a tightening rental market leads to luring investors and their activity. Westpac predicts price growth to slow down due to affordability issues. continues, predicting a 4% national rise for 2024 and 2025, even as interest rates are set to decrease.
Now, while there has been strong growth in Sydney in this current year, there has been a bit of a slowdown with auction clearance rates. These can be pretty dynamic, so they can change from week to week. But in the most recent weekend, auction clearance rates in Sydney fell below 70% to 69.1%. And we have seen some agents reporting that a lot of auctions have been pulled, that agents have tried to negotiate before auction with the buyer. Now, Nathan, do you want to explain what the rationale is in here? Why would an agent try and negotiate before the auction day?
Now, typically, if they know they've only got one interested buyer on the property, they'll try and sell the property before the auction, because the last thing they want to do is rock up to auction, there's one interested buyer, and then that buyer has hesitation. They start to get worried. They think, am I overpaying for the property? Maybe their $1 million bid that they were going to put in comes down to $900,000. So sometimes we will see auctions getting pulled earlier because of that factor.
Yeah, so I watched a really interesting video on a real estate agent explain the rationale, and they say that this buyer potentially is what they call a price leader. So when you might be leading up to an auction, the agent will typically ask, well, do you want to make an offer before? We're considering, taking offers before, make an offer. Nathan might offer $1 million on a property before auction. I might be there with other buyers at 500,000, and the agent says, well, if we go to auction, this guy's going to look like a turkey trying to outbid these people at 500,000. We're going to try and negotiate with the price leader before, try and get a deal done, because we know he's going to pay way more than everyone else. And this is where auction can be tricky. It can be pretty challenging. We've got a bunch of guides, so check out our other videos when you buy an auction to help you through that process.
And remember to like, share, and subscribe to stay informed with all things property and finance. Now, SQM's head of research, Lewis Christopher, believes that there might be a discernible downwards trend, signaling the market will soften but not stagnate.
Yeah, so interestingly, this revised forecast from Westpac is completely different from their earlier prediction that said there was going to be a major slowdown in housing because of interest rate hikes and a weakening economy.
Even with the Reserve Bank deciding to hold interest rates steady this August, Westpac is predicting that interest rates will stay constant for a long time, with potential rate cuts anticipated for the later half of 2024.
So Westpac do believe that the rate rises are going to have an impact, that potentially it's going to slow down the labour market, increase unemployment, and it's going to really potentially have a less severe impact to people's disposable income than they'd previously predicted.
And for the housing market, a crucial note is that the unemployment rates are expected to rise slowly, a peak at 4.8% in early 2025, and this is more favorable than their expected 5.5% forecast. And this is where Westpac updated their forecast, because some of their previous thoughts and anticipations aren't likely to come through.
So Nathan, is it the right time to buy a house? As we say all the time, it's not the timing, it's the time in the market. So you really need to look at your own situation. You need to be doing your own numbers, look at your borrowing capacity. If you're right at your limit, if you're concerned about your work, if you don't have a lot of buffer or deposit left over, then potentially it might be worth waiting and saving up more to be in a better position. On the other hand, if you're confident with your work, if you think your income's going to increase, you're going to have some buffer there, then it could be the right time to look. But at Hunter Galloway, that's where we can help you out. We can run the numbers, see what's possible in your situation, and help you plan whether you're looking to buy today or in the future.
And that's where working with a mortgage broker can help. Did you know here at Hunter Galloway, we're a mortgage broker and deal with people Australia-wide? If you need assistance in buying your first home, reach out with us at huntergalloway.com.au, fill in a contact form, or call us directly on 1300 088 065, and we'll see you next time.